David Cassese from the $28 billion BlackRock Equity Dividend Fund is here to give us some of his favorite stock picks. Welcome, David.
Thank you.
All right, let's start off with Home Depot. This stock has outrun the S&P year to date. They're betting on a huge housing boom that's going to keep up. Do you think the stock will keep up?
We do. We look for companies that have big competitive advantages. Home Depot has two of them. First, the bricks and mortar competition. They have better locations. In most markets, you have to drive past a Home Depot to get to a Lowe's. We like that. Versus the online competition, most of the products that Home Depot sells are not really conducive for online selling. They're big and bulky. Shipping is expensive. So great competitive position. We've seen sentiment turn in the housing market, but we haven't quite seen people step up and start doing big remodeling projects yet. As that happens over the next couple of years, we think Home Depot can continue to grow earnings in the double digits.
All right, you're also a fan of VF Corp. They make the North Face. Now, why do you want to own a winter wear apparel maker heading into the summer?
Well, VF Corp owns a lot of brands, not just the North Face. North Face is one of their biggest ones. They own Vans, they own Timberland, a large, diverse portfolio of global brands. What we like about VF Corp is they're consistent, steady growers. They have a great international growth pipeline over time. They're growing 20% plus in Asia. They're growing doors in Europe and Northern Europe in particular. And in the US, they're gaining share. So again, very well managed company, great competitive position. We think they're a double-digit grower for a long period of time.
You are a bull on IBM. This stock is now over $200 a share. Do you think we'll get a split anytime soon?
I don't think it's something management's focused on. Let me talk a little bit about why we like IBM. So we've had three major tech spending waves. In the 80s, we had the PC wave. In the 90s, 2000s, we had the internet wave. Right now, we're in the early part of a big spending wave on cloud, virtualization, big data, and analytics. IBM is a great way to benefit from that tech spending wave without having to make an individual technology bet. They're a services company. They help other companies figure that stuff out.
And no split?
I don't think it's split, no.
All right, finally, if you want to talk about tech, let's talk about Microsoft. This stock has been stuck under 30 for a long time. It pays a nice dividend around 3.3%. Do you buy it for its bond-like nature, or do you buy it because you think it'll eventually get through 30 and get to 35?
We think it can get to 35. We think there's growth here. Microsoft has had a nice collection of assets for a long period of time. They haven't put them together in the right way. We think Windows 8 is the catalyst that gets the different parts to work together. Microsoft has a great competitive position on the enterprise. When people talk about Apple or Google, they talk about the value of the ecosystem. Well, Microsoft has that ecosystem too. It's just in the enterprise level, not at the consumer level. And with Windows 8, we think they could finally start to put the pieces together, work their way back down from the enterprise, back into the consumer side, and be that big third ecosystem.
Thank you.
Thanks.
And thank you for watching The Street.